this is Sun Chang, the Korean bro. Today is 2022, July 28th, uh, Thursday night, and uh, before we go over the articles, let me tell you what I think recently, um, about the stock market and in general. Um, it's been almost 9 months since I started doing YouTube, and I've uploaded more than 100 videos, or like 150 videos so far. Um, mm, I've been uploading it continuously, and I think at least I try to upload 3 times a week, and I feel really great. Um, I feel mm, I'm like a step closer to uh what I want to do in the future. And plus, since like videos that I uploaded are being accumulated, I feel like at the same time my level goes up. Mm. Of course, possibly it could not be it. It could not be. Uh, I cannot just say the number of videos that I upload is equal to the level that I'm in. I cannot say like that, but then I just feel like uh, I just feel good because it's some things that it's it's proof that I've been doing something, right? It's proof that I've been doing something, and it shows my efforts, right? So anyway, I've been just talking myself too much. Okay, let's go over the articles on market beats. The FOMC put a bottom in the S&P 500. Uh, can these two airline stocks overcome gravity and fly higher? What's in and out of Democrats' inflation fighting package? A closer look at Disney. Can it earn a place in your portfolio? Should you buy AVI ahead of earnings? Hmm. Waste management earnings beat expected stock gains. Can these two airline stocks overcome? Harley Davidson stock raised higher on profit growth. Cyprus Greece looks to EU if Turkey renews gas surge. AI stock is a bargain enterprise artificial intelligence game changer. C3 AI stock is a bargain enterprise artificial intelligence game changer. Um, a closer look at Disney. Uh, use high beta stocks to maximize your investing profits. Okay, let's read this first. Okay. Oh. Hmm. FOMC highest rate 1.75% market shares. The FOMC gave the market what it wanted, and high rates by only 75 basis points, despite indications inflation continues to run rampant. Um, the FOMC also indicated a peak in interest rate hikes, which really got the market moving. The FOMC, which has been on top of inflation right from the start, is banking on inflation peaking as well, but that is not what the average suggests. Not only did the latest CPI come in much hotter than expected, but publicly traded companies from paint and glue makers to consumer staples are indicating additional price hikes in their earnings reports, which means systematic inflation is still present and the inflationary cycle is not over. Okay, the point is, FOMC hikes rate 0.75%, which is not as high as everybody expected. It's much lower, and it uh, the FOMC. Um, but yeah, it didn't rate. It didn't raise that much rates. But then inflation is not over, and it's still ongoing process. Uh, it's still present, and the inflationary cycle is not over, right? Uh, the outlook for the S&P 500 earnings is dimming. Let's read this. The quarter second earnings season is turning out better than expected, but only in relation to the consensus estimates coming into the quarter. The blended rate of earning growth has risen about 80 basis points since the start of the season, but this is a very narrow margin compared to past quarters. The S&P 500 has beaten the estimates by a high double-digit figure since the pandemic began, and this is the slowest paces of outperformance since even before the pandemic started. This indicates growth is not only priced into the market, but also opens the door for underperformance in future quarters as inflationary pressures bite more deeply into the bottom line. As I look the outlook for earnings growth, while the quarter second period is outperforming, the outlook for quarter third, fourth, in 2023 are all in decline. The consensus outlook for quarter three and quarter four is down more than 200 basis points from the start of the season. The figures are expected to fall further. There's still about 45% of the S&P 500 left to report, and includes some of the most sensitive, including many of the retail and consumer discretionary stocks. Okay, um, even though we had a great fall this year, uh, its fall is expected another year. Its fall is expected next year again. Uh, can these two airline stocks overcome gravity and fly higher? Airlines as a group are hardly flying high, but stocks including American Airlines and Delta Airlines are at least participating in this week's market rally. If you're like me and have been flying regularly in the past year, you may have experienced completely full flights and pricey tickets, suggesting higher airline revenue, but also cancellations and delays, which just angers and frustrates customers. Um, Both Delta and America posted earnings in July. Delta got a small amount of lift after the report, but American is trading slightly below where it closed following its results. Delta earned a $1.44 billion per share on revenue of $13.8 billion. Those were year-over-year increases of 235% and 94% respectively. Uh, mm, so they expect their revenue could possibly go up and be up 1 to 5%. Airlines, including American Airlines and Delta Airlines. A closer look at Disney can it earn a place in your portfolio? Valuation is complicated. Disney has been covered by market beat previously in our round of stocks that could potentially be undervalued. The rationale behind this thesis is that the company has reopened its theme parks after COVID and has a streaming service that's gaining steam. Okay, Disney also provide a streaming service. Disney is still trading near the bottom of its 52-week range, so the combination of these factors has put this company on some investors' radar. Mhm. This article will detail the company's pros and cons to give you a balanced viewpoint. Disney's valuation is complicated. Despite Disney trading near historical lows for several time frames, it can be considered expensive on other relative valuation metrics. When compared to its industry sector, Disney is 120% more expensive for its PE gap ratio at a 40.69 compared with 18.47. It's also more expensive to buy one unit of Disney shares than competitors in the sector's median at 2.78 compared with 1.93. Mm. Okay, so at the end, what I can get is that business valuation is complicated. It's complicated, so it's complicated. Should you buy AbbVie ahead of earnings? AbbVie is a stock that has recently made its way to investors' watch list. The company is due to announce its earnings this week, and it has already made quite a stir due to change in its fundamentals. Market reported that the company had tripled its dividend to $1.41 in the last decade, as well as trading at what could be seen to be a fair valuation. In this article, we'll cover the other elements of AbbVie that makes up its strength and weakness. One factor that plays into the bull case of investing in AbbVie is that the company is very profitable on an absolute basis compared to its sector median. The company has a gross profit margin of 69%, while the sector median is 55%. Other margins for the company have an even greater difference from the sector median. Growth and negative revision headwinds. Okay, let's skip. Nothing critical. Waste management earnings, but expected stock gains. Uh, well, WM is well positioned in any economic environment given the essential nature of the services we provide, the annuity-like characteristics of our revenue, and our reliable business model, said WM President CEO Gene Fish. Our solid results in the first half of 2022, driven by our focus on disciplined pricing and cost management, give us the confidence in our ability to deliver on our new higher outlook. Waste management is waste management, comprehensive waste, and environmental services. A group based out of Houston, Texas, the company continued to witness strong results across its business segments during the quarter. Hmm. Waste management during the quarter had a number of key 570,000 MMBTU of RNG, bringing the total capacity to 21 million. Results for the company continued their good run of form, with the landfill segment growing by 10.2%. The continuation of strong results points to a business that remains durable regardless of the broader economic environment. Huh. Waste management, waste management, waste management, waste management, waste management. Hmm. Hmm. C3 AI stocks Spark Enterprise Artificial Intelligence game changer. Enterprise Artificial Intelligence application software company C3 AI. A stock has been crushed for a year. The artificial intelligence software company was created by former Oracle executive and founder of Selby Systems, Tom Sibel. The platform enables clients to develop and deploy enterprise AI applications. AI is considered the next secular growth opportunity, shifting systems from a history of the descriptive to predictive. C3AI is in this core of it. The company grew revenues 38% and its remaining performance obligations grew 62%. The RPO is how many future revenues remain to be collected on existing contracts that are not yet invoiced, the sum of the invoiced amounts. The company signed a 5-year, 500 million transaction agreement with the U.S. Department of Defense and received the first two orders. Its oil and gas clientele has grown 116%. The company also closed a $250 million contract with Microsoft and continues to strengthen its collaboration with Google Cloud. Despite lowering its revenue guidance, C3AI has nearly $1 billion cash and cash reserves. AI has taken software from providing history information to providing predictive knowledge. It enables companies to take preemptive actions to sidestep problems and grow efficiency and productivity. Hmm. Huh. Nothing interesting. Let's go over to Yahoo Finance, okay? U.S. economy contracts for second straight quarter. Amazon set to report earnings amid recession fears. Why the Fed rate hikes and stocks soaring. Um, Kathy will art reverse course, but buy Shopify. Why tech could struggle to rebound anytime soon. Shopify cuts jobs, joining Netflix and Apple in slowdown. Running list. JP Morgan thinks these two tech stocks could more than double from here. Too strong buy dividend. Stocks under $10 with at least 10% dividend yield. Putin is squeezing gas supplies to Europe. Here are two stocks that could benefit. Warren Buffett uses his three stocks for fat inflation fighting income stream of $1.9 billion. Follow along now for some healthy cash. If you don't need it, don't buy it right now. Here's where the Fed's new rate hike will hit you hardest. What you can do about it. Fat Watcher says market got it all wrong on Powell pivot. Carvana stock has tanked this year. The deep discount makes it worth a look, says analyst. Kathy Wood's Art Invest dumps 1.4 million Coinbase shares amidst SEC probe. Five Nostra stocks to buy in Washington. Here are the fundamental and technical reasons why. Time to bottom fish tree. Strong buy stocks are too cheap to ignore. Global Foundries stock shows up with rising relative strength. Amazon expected the post-slim profit as it manages slower demand. Activision's Microsoft deal discount offers a Call of Duty to investors. Best dividend stocks, top pipeline stock raises dividend again, delivers 7.3% yield. Walmart wreaked havoc on retail. Grab these unfairly punished stocks now. Buy Warner Bros. Discovery, Goldman Sachs. The merger will drive up the stock. Kraft Heinz earnings beat the forecast while the stock is falling anyway. Boeing reported another big loss, 737 max concerns are hitting the stock. Amazon's June quarter will be bad. The question is what happens next. Altria's earnings beat expectations. It maintains outlook. Apple earnings day is here. $1 and inflation could be buyed. Intel reports earnings today. Pay attention to its guidance. Alphabet. When will inflation peak? Stock falls as revenue guidance falls short of expectation. Coinbase troubles are too much for Kathy Wood and as Art dumps the stock. Okay, this is enough. Okay, U.S. economic activity contracted for a second consecutive quarter in quarter second. Data from the Commerce Department showed Thursday. The Bureau of Economic Analysis advanced estimate of quarter second U.S. gross domestic product showed a 0.9% annualized decrease in economic growth for its 3-month period ended June 30. Economists surveyed by Bloomberg expected the data to show the U.S. economy grew at an annualized pace of 0.4% last quarter, according to consensus estimates. During the prior quarter, U.S. economic activity unexpectedly contracted for the first time since the second quarter of 2020, when the COVID-19 pandemic upended the global economy. Government third and final estimate of first quarter GDP showed a 1.6% annualized drop in economic growth to start 2022. The government's preliminary reading on second quarter GDP comes one day after Federal Reserve Chair Jerome Powell told reporters at the press conference that he did not believe the economy is in a recession. Amazon is set to report earnings amid recession fears. Amazon is set to report its quarter second 2022 earnings after the closing bell on Thursday. It's a dicey time for tech, and earnings season has only continued to bear that out. On Wednesday, Facebook owner Meta Platforms reported its first ever year-over-year revenue drop. And earlier this week, both Google parent Alphabet and Microsoft reported earnings that didn't meet Wall Street's expectations. Although both Microsoft and Google particularly have their bright spots, this round of earnings season has been relatively brutal for the tech sector. So where does that leave Amazon? Here are the most significant numbers Wall Street's anticipating for Amazon's upcoming earnings report as compiled by Bloomberg. What experts are watching for. The future of Amazon's cloud business is key. For instance, the analysts at Mizuho Securities, James Lee and Wei Fong, worry that recession fears will cause corporate spending on cloud services to decline, negatively affecting Amazon Web Services, or AWS, according to a July 20 note. Data from the Commerce Department showed Thursday the economy contracted for a second straight quarter in quarter second, a development that will likely further shrug recession concerns. Our recent industry call with a leading IT services firm indicates that enterprise CIOs are anticipating a shallow recessionary scenario and planning to reduce cloud spending growth by about 10 points in FY23, the note reads. So Lee and Fang are notably optimistic about Amazon in the long term. While the valuation is attractive, we remain constructive on Amazon longer term. We believe the stock lacks catalyst in the short term due to a likely downward revision cycle, the analyst wrote. Why the Fed's latest rate high sends stock soar in morning brief? Stock moved in one direction Wednesday higher. When the closing bell rang, the Nasdaq was up over 4%, the S&P 500 had risen 2.6%, and the Dow was up 1.4%. This marked the Nasdaq's biggest rally since November 2020. Including Wednesday's surge, the S&P 500 has gained more than 1% after each of the Fed's last four meetings, all of which have included interest rate hikes from the central bank. And since hitting its most recent low on June 16, the S&P 500 is now up 10%. What ultimately moved markets on Wednesday was, as always, expectations. Specifically, expectations that the most aggressive of the Fed's actions to raise interest rates may now be behind us. Chair Powell bolstered expectations of policy pivot at his July FOMC press conference, said Lee Duda, head of economics at Renaissance Macro. He noted that it is likely appropriate to slow increases at some point. Importantly, the rising uncertainty in the economy outlook has pushed the Fed away from explicit forward guidance to data dependence. Financial markets have responded in kind. From the standpoint of our congressional mandate to promote maximum employment and price stability, the current picture is plain to see. So what led price to go up in the stock market last night was expectation that federal what was it federal feds Fed wouldn't rate wouldn't rate wouldn't raise rates that much. It was people's expectation. That the most aggressive of the Fed's actions raise interest rates. may now be behind us. May now be behind us. Kathy would watch art reverses course by Shopify. Kathy Wood, CEO of Art Investment Management, reversed her stance on two major technology companies. Renowned investor Kathy Wood, chief executive of Art Investment Management, in Tuesday trading, reversed her stance on two major technology companies. For months, she had been buying Coinbase Global, the country's largest cryptocurrency exchange, and selling e-commerce platform Shopify. But ART went in the opposite direction on July 26. All valuations below ART as of today's close. ART funds unloaded Coinbase, valued at Tuesday. Report said that the Securities and Exchange Commission was investigating whether the company legally let customers trade digital assets that haven't been registered as securities. Coinbase shares dropped 21% on Tuesday and have slumped 79% year to date. As for Shopify, ART funds snagged shares of the company, which hosts online stores for many small businesses. The stock was valued at $55.7 million. The company said Tuesday that it was dropping about 1,000 workers, or 10% of its workforce, reversing a bet that its surge of business earlier in the pandemic would continue. While tech could struggle to make back this year's losses anytime soon, tech stocks are taking a beating this year. The Nasdaq Composite is still down 80%. Despite notching its best day since the pandemic lows, up 4%. DocuSign says nearly 80% in the red over the last year, and PayPal is off over 70%. These are just a few of the web apps facing investors and individuals' names in the sector. This has been a difficult pill to swallow for investors cringing at the thought of cracking open their brokerage statement. But the pain might not be over anytime soon. The reality is that we're still in a situation with high inflation, with tighter monetary policy, which means higher discount rates. Liz Young, head of investment strategy at Sophie, said on the latest Yahoo Finance Plus webinar, as long as those rates stay high, we have a headwind for tech, or at least sort of a ceiling on the high growth stocks, or at least a sort of a ceiling on the high growth stocks. Okay, there's still inflation is not still over; it's still present. Thus, with tighter monetary policy and with high inflation, higher discount rates, we won't have a bright future. As long as those rates stay high, we have a headwind for tech, or at least a sort of a ceiling on those higher growth stocks. Fiscal and monetary largest has disproportionately benefited the high growth names dependent on low interest rates. The stocks have borne the run of the declining market as the Federal Reserve moves to tame down runaway inflation by raising interest rates. And the issue for tech investors are valuations. They get more challenged as risk-free rates rise. After a lofty jump in the stimulus-laden heavens, multiples are returning to earth. That is, the numerator in the price to earnings ratio has been sinking as earnings remain flat. And blah, blah, blah. So, another good time will come anytime soon because inflation is still present and big giant tech is having hard time for sure, and it's taking a big hit. It take a bidding, but it's okay. Shopify cut jobs, joining Netflix and Apple in a slowdown. A running list. With recession fears mounting, inflation, the war in Ukraine, and the lingering pandemic taking a toll, many tech companies are rethinking their staffing needs, with some of them instituting hiring freezes, rescinding offers, and making rounds of layoffs. Hmm. On Tuesday, Shopify announced that it cut 10% of its workforce, joining dozens of others in pulling back on jobs. Here's a look at the companies tapping the brakes. Alphabet, the Google parent company, has been decelerating its recruiting efforts. Chief Executive Officer Sundar Pichai told employees this month that although the business added 10,000 Googlers in the second quarter, it will be slowing the pace of hiring for the rest of the year and prioritizing engineering and technical talent. Like all companies, we're not immune to economic headwinds, he said. The hiring pause is part of that slowdown, Google said, to enable teams to prioritize their roles and hiring plans for the rest of the year. It had nearly 164,000 employees at the end of March. Um, Amazon said in April that it was overstaffed after ramping up during the pandemic and needed to cut back. As the variant subsided in the second half of the quarter, and employees that returned from leave would quickly transition from being understaffed to being overstaffed, resulting in lower productivity. Mhm. JP Morgan thinks these two tech stocks could more than double from here. Okay. Nerdy, and we got Uber Technologies. Okay, let's read this. Hmm. With this morning, in the case for a better tech segment, we have been arguing to tactically favor growth over value, which can also be expressed through a better showing of the tech sector. Let's start with Nerdy, an education tech company that uses an interactive digital platform to deliver online learning programs. The company uses its proprietary platform, powered by AI, to personalize learning experiences for students at all levels, from kindergarten through primary and secondary ed out to professional enrichment. Uh, Courses are available in more than 3,000 subjects in a variety of formats, including one on one tutoring, small and large group classes, and self directed study. Okay, we got Nerdy here. Nerdy, let's look at the price of Nerdy. Mm, Okay, how many full time employees do we have in Nerdy? 1,000. Hmm. Which was founded in 2007. Okay, long ago, entered the public trading market last year and through a stock transaction with TPG Pays Tech Opportunities. The transaction was approved on September 14, and the Nerdy ticker started trading on September 21st. The transaction brought more than $575 million in gross profits to Nerdy, which was valued at time at $1.7 billion. During that time, however, Nerdy has managed to reach company record revenue levels. Nerdy. Hmm. Transforming how people learn. Uber Technologies. The next JP Morgan peak we'll look at is Uber, the company that turned the taxi industry inside out and made ride sharing a household term. Uber pulled up to our front car back in 2009, offering an easier way for commuters to hire a ride. Today, the company has expanded its service to include seamless employee travel, food deliveries, and even flight bookings. Uber now operates in over 10,000 cities in 72 countries, boasts 150 million monthly active users, taking 90 million rides daily, and has paid out a cumulative $180 billion to passenger and delivery drivers. Uber is worth hmm, Uber is worth spending. Uber Technologies. It got nerdy. Putin is squeezing gas supplies to Europe. Here are two stocks that could benefit. The first I will look at ConocoPhillips is one of the biggest names in the energy sector. This $116 billion company operates in 13 countries, employs more than 9,400 people. Last year, produced more than 1.5 million barrels of oil equivalent every day, leading to annual revenues of $46 billion. This year, the company is continuing to show high revenues and earnings, and is shifting its focus more toward natural gas. On the matter of natural gas in June, ConocoPhillips announced that it had won a stake in the North Field LNG expansion by Qatar Energy. The move makes ConocoPhillips the third partner in the project and gives the company a foot in Qatar's natural gas production, which is being ramped up as a potential substitute for Russian fuel exports to Europe. Since Russia has started exporting natural gas to Europe, some competitor could take the market instead. Uh, and that company's name is ConocoPhillips. And earlier this month, ConocoPhillips filed an announcement with the news they had signed an HOA with Sempra Infrastructure, which will allow for expansion of COP's liquefied natural gas business. Mm. Cheap Energy, based in Oklahoma with easy access to Tesla's oil patch. Cheap Energy is at $111.7 billion, higher carbon explorer, and developer with assets in some of the richest production areas of Texas, Louisiana, and Pennsylvania. So, since Russia started, Russia stopped producing, not producing, Russia stopped exporting natural gas to Europe. Some other company has to be part of providing natural gas or energy to Europe, right? And the companies that take that role are two companies, all of which that I just mentioned. Warren Buffett uses his three stocks for fat inflation, find an income stream of $1.9 billion. Follow along now for some healthy cash returns. We got U.S. Bank Corporation, Coca-Cola, and Chevron. He loves Chevron. If you don't need it, don't buy right now. Here's where the Fed's new rate high will hit you hard, showing what you can do about it. Hmm. After lower interest rates to spur or spending during the pandemic, the Federal Reserve would very much like you to stop now, at least until inflation is under control. Uh, the Fed raised the federal funds rate 75 basis points for a second consecutive month, making this the fourth rate high since March. Mm. After lowering interest rates to spur on spending during the pandemic, the Federal Reserve would very much like you to stop now, at least until inflation is under control. The Fed raised the federal funds rate 75 basis points for the second consecutive month, making this the fourth rate hike since March. The benchmark interest rate now sits in the range of 2.25% to 2.5%, which doesn't sound too bad. But banks and lenders then add their interest rates on top of that, which is when your credit starts to get pricey. When the price of peanut butter goes up, it's bad for sales of jelly. So if the price of credit goes up, it's bad for things where people typically rely on credit to get it, says Mark Ridd, professor of instruction in economics, Northwestern University, housing cars, things of that nature. Carvana stock has tanked this year. The deep discount makes it worth the look, says analyst. Carvana. The sell-off in Carvana stock has been brutal, with the shares losing nearly 90% this year. That could soon present an opportunity for investors looking to buy the stock at a discount. According to Raymond James, analyst Mitch Language believes the stock's current risk and reward profile is relatively balanced heading into earnings. And upgraded the shares to market perform from underperform on Wednesday. So Carvana is at the point where people can actually gain profit, and according to experts working at capital firm or like the financial institutions located in the states. Anyway, top and bottom for straight strong buy stocks are too cheap to ignore. What are three? There might be signs of improvement. Many stocks were sold down significantly for a year, and with changing sentiment, this could spell opportunity. Vintage Wine Estates, Town Square Media. Nothing shows potential from what I see. Global Foundries stock shows up with rising relative strength. Be sure to pay attention to relative price strength. Relative price strength. Relative price strength. Why? IBD's proprietary RS rating tracks market leadership by showing how a stock's price movement over the last 52 weeks compared to that of the other stocks in our database. Hmm. Relative price strength is one factor that you should consider when investing money. That's the point here. Global Foundries stock went up. That's also the second point. Walmart rate having on retail grab these unfairly punished stocks now. You know, Coinbase's troubles are too much for the Cathy Wood as Art Dom's stock. Investors in Coinbase Global have been taken on a painfully vertical ride this year, with shares in the cryptocurrency exchange plunging amid a business slowdown, stock market reckoning, and regulatory pressures. Now, even one of the bravest riders of financial roller coasters is looking to get off. Okay, this is it for today. I've read too much. Um, I picked like 20 articles, and like, of course, I didn't read like every words, but I feel like I paid too much attention to it, and I'm like out of energy. I'll see you guys tomorrow, and I'll share with you guys uh like things that I just traded, things that I just invested into, and the companies that I really think have upside potential, stuff like that. Um, but let's see. Okay. 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 This is it for today, and I'll see you guys tomorrow. Okay. Bye bye, everybody.